Hi traders and welcome to the Technical Analysis Market Wrap on Friday the 1st of April. So we've got some good levels that we're going to look at today on a lot of the key majors and some of the indices. We're sitting at very, very strong zones and we've seen some pretty good movement this week. So we'll get straight into the markets and see if we can find some trades for today or early into next week. Let's start with the Aussie USD as we always do. Look, big week of confusion. As you can see, we're at a very strong point of resistance, the same place that we really were last week for most of the week here. But we've rejected every single day off it, right? So last week, we were hovering around that 75.20, and here we are. We've seen very big confusion all week. So we've seen very big wicks on both sides. Basically, all of these are indecision candles. You've got 1, 2, 3 in a row. Then you've got a big shooting star candle at that point of resistance. I mean, the market's telling us exactly what we already kind of know, that we're at very strong resistance, and it's going to take a pretty big move to get past it. Looking at these indecision candles, especially the last couple, more importantly, you can see that the wicks are really pushing to the downside, right? So this is a classic shooting star candle, no question about that. And this one here hasn't closed yet, but when it does close, if it does close around this level, you can see that obviously the sellers have definitely won this war. And that's what you've got to take into consideration. It's not so much just patterns. You've got to understand what the buyer and seller dynamic is. And clearly the last two candles, although the first 3 days of the week were very confusing and basically finished where it started, in the middle of nowhere, with the buyers and the sellers getting their way for a period and then closing pretty much at the same place. The last two candles have told a very different story. And even though this shooting star is green, don't let that trick you into thinking that that was actually a good day for the buyers. All that happened was that the buyers actually closed it a little bit higher than the sellers at the end of the day, but it's still a negative candle, make no mistake. The buyers tried to get it above this level and failed, okay? And this candle on the last one here that's printing is another example of that, but in this instance, though, the sellers are well and truly winning this war, and it's going to take some sort of a miracle to actually reverse that. So, that being said, this is where the weakness is. We know that it's resistance there, so we're going to play for that game. The obvious target is the low 74s, right? There's no question about that. We know it's a role reversal zone. We know it was previous resistance, and we would expect that would be the next support level if it does fall from here. A few things have to happen for that to actually transpire, but we'll have a look at the smaller time frames in a second. But look, we know we've got a role reversal zone there, and we've also got a trending moving average that should be just about there by the time it catches it up. When this candle closes, this will transition one more step. So we really should get a bit of a backing of a trending moving average to help hold that up. That holds it in good stead for the target, but also potential longs from that level. So look, in order to trade this, what we want to be doing is going down to the smaller time frames. Of course, you can see that the 4 hours is basically flat lining. This looks like a double top at a place of resistance. No question about that. In order for this double top to work out, it needs to break the neckline, okay? And it also needs to break the 50 moving average. So that's going to require a break of the 74.65. A 4 hour close on that would get the job done. Going to a 1 hour, look, we're not really getting much more information on this other than what we saw on the 4 hour, obviously just a little bit more messy, if you like. I mean, it's channeling up in there, there's no worries about that. But we need to break this channel effectively. Even though all the patterns are different, we are expecting the exact same thing, okay? And that's a close below 74.65. So if we get that on the daily chart, that will be our signal to, get a short trade in. The stop loss is obviously very easy. It's just slightly above the previous highs. Okay, so just a handful of pips above the previous highs here. And the take profit is a very easy one as well. So we're aiming for around that 74.15. And it's about, we're looking about 50 pips. So that's what we're really aiming for here. And yeah, it's just a scalp because we don't really, I wouldn't be trading it any lower with any confidence. The other side of the trade, of course, is if strength returns and returns very quickly and we get a daily close above this level, at that point, then we would be looking for a reversal on the smaller time frames off this level, bounce up and off we go. But that is a lot of movement for that to happen, and the daily has to close above these levels. That's the only way I would get involved in that, knowing that this has been so strong. Okay, so very important that we get a daily close above here to trade it, or a daily close below here to actually short it down to this level. So pretty straightforward trading on the Aussie USD. All right, we'll go over to the US dollar CAD. Similar story, but not quite as straightforward. We are at a support zone. We know that it's tried to break through, failed. Okay, it did really try on this candle here. Yesterday's candle was a serious attempt to try and break lower, but the buyers really picked up momentum towards the end. And again, although it was red, it's not quite a full-fledged hammer, but and it's a red one, but it don't let the color deceive you. The buyers were in control of that candle at the end of it, and as a consequence, the next candle was fairly green. So you can see that, yeah, it is below a little bit of support now, so it's broken down. That could form a little bit of resistance. I don't think it will, though, because these wicks here gave us a very, very big move out of there. So it does launch from this position. You can see several times. You always look to the left-hand side of the chart for the clues as to what might happen. And you can see here that when it did touch this level, it exploded out, okay? Same deal here. It came and touched the level, exploded. Same deal here. When it did eventually break through, it really exploded. So I don't know if this level is going to be treated that strongly as a resistance point. I think that if we do get momentum above it, we could see a pretty strong move out of it. In the first instance, straight to the 20 moving average. So, yeah, again, it's only a scalp. I'm not convinced that we're going to go long on this one. Hasn't done enough and hasn't given us enough evidence to tell us that it's going to go strong. So realistically, we want to be basically making sure that we get a big move. If we get the close above this level here, which is a new high, we'll be comfortable with that. And if we don't, what we'll do is basically look for a smaller pattern on a smaller time frame, go to a 1 hour, look for a change of trend in this area here. If we get a lower high, lower low sequence, then we will be looking at breaking it down and looking for the shorting opportunities. All right, so we'll move on now to the US dollar yen. Look, this has played the game pretty well, really. It hit a very, very strong zone at the 124.70 level to 124.80. Very, very strong. Look, it's been extraordinarily strong, really. So the problem with this one for me is that it's broken through a lot of resistances, and you kind of do expect that it's going to come back aggressively, which it did. I mean, it dropped, several hundred pips there from that level. This was the logical level it was going to come to, but really, realistically, it was going to be very hard to draw at the time. So a difficult trade at the moment, because realistically, you've got to go out a long way to see why this level is actually even strong. And then when you look at it on the bigger time frames, you can see here that this is obviously a point of resistance. There's no question about that. But you can see, on a weekly, like, that's a very, very, very big rejection. And if that closes there, that's an extraordinarily ugly weekly candle for, the sake of the long. So to me, when I see this, I'd probably rather just sit and wait. It's not one of the ones that I'd probably want to be jumping in and trading with any sort of confidence, because realistically, it's an extraordinary pullback in a week. So I would probably just sit and watch on this one, and let's give this one a day or two to settle down and let it pick its direction. Very, very difficult to get involved in. It's one of those ones where we'll see if it breaks lower, and if it does break lower, we've got pretty clear targets to aim for, and it's not even down here. I wouldn't be even aiming that. There's targets somewhere in the middle, probably around the 120 in the first instance, but I wouldn't be wanting to jump in on that one just yet, because this was an extraordinary move, and when you see that sort of movement, you want to be really, really careful on how you play that game, okay? So I reckon we'll just sit and watch on this one, and let's just see what it looks like next week before we start to get too excited about the direction, whether it's actually going to go long from here again or short. All right, dollar index is one that, look, it tried to break lower, failed to do so, and it's had a bit of resurgence today. In the last session, you can see that we've had a pretty big pull up. It hasn't really finished and engulfed the other candle, so it hasn't done its job completely yet, but it's well on its way, right? So what we're looking for here is a bit more strength. If we see some strength throughout today and into tonight's trading in the US, and we get a close above this level here, it's going to be quite bullish for next week, and that's going to bode well for a euro short. So we'll jump into the euro in a second, but we want to see, at the very, very least, we want to see this daily close above the 20 moving average, okay? So even if it doesn't make a new high here and get above the 98.38, we want to see at least a level where it breaks the 20 moving average. So if it closes where it is now, we'd be relatively satisfied with that, but a break of that, above 98.40 would be actually ideal. So that's what we're looking for there. Over to the euro, of course, the short is where we're trying to aim for. It did try and break higher, but it is at resistance. We know this. This is a very strong level of resistance. So we treat it obviously with the caution that it deserved. 50 moving average there was holding it up as well, and it has sold up. Now, look, it's in between the 50 and the 20 moving average as well, so we've got to be a little bit careful here, of course. We know that it's in between two very key zones. The 20 moving average and the 50 may well hold it up and, keep it confined for a little bit, but to me, this one has to do one thing or another. It's either got to break above the new high here, it's got to break above the 111.80 on a daily candle, and if it does that, we'll be convinced that this level is broken, and then we're aiming for the 112.50. Pretty straightforward take profit. and if it actually closes and makes a new low, it doesn't have to go all the way to the very bottom, but it's got to close below here. For mine, I'm not going to be interested in this one unless it breaks below 109.50. If it does that, then we can start aiming for the lows at around the 108.50 or the low 108s. Okay, so this is the level that we'd be aiming for in that instance. But again, at the moment, I think it's confined to this level here. So realistically, if you want to scalp it, you go to the smaller time frames and you're scalping effectively between the 110.50 and the 111.50. You know, we're going to have a little bit of conjecture at both levels. We're going to see the 50 and the 20 probably hold it up. The 50's got a fair bit of roll reversal resistance there as well to actually keep it down and confined. So they're the two levels that we'll be looking at for the scalp. If you scalp in between those two levels, take profit and stop losses on either end until it breaks out. And then when it does break out, we've got a very clear target of 112.50 or 108.50 or 108 if you really want to get adventurous all the way to the lows, depending on how fast it's coming down. All right, on to the US 500. So this is the one, we've seen a weak session now. You can see that, it's hit. Look, it's had an extraordinary move. I mean, it was due for a bit of a pullback, of course. And, so no surprises here. It does find itself at a level of support, though. I am mindful of that. We've also got a 20-50 moving average crossover. Look, we make no secret that we're probably expecting a little bit of strength in April. Doesn't mean it's going to, but, we probably needed this pullback. It couldn't just continue green every day for, crazy amounts of days. So realistically, a pullback to this level was certainly expected. And this is the level it was going to pull up if it was going to pull up. Now what we do, we look at it and we wait and see. We wait and see if either one, a daily close below this level, and it needs to go a bit lower than this, by the way. I mean, it needs to go probably under 4,500, a daily close under 4,500, which convinced me that we're starting to look a little bit weaker, and then we'll look to moving down to the 20 moving average. That would be ideal. I wouldn't be jumping in that short right now, but that's probably the one I'd be aiming for and targeting for a pullback to the 20 moving average. That makes sense. Failing that, though, a small roll reversal at this level would see us going out and try and aim for the 4,600 again, and then maybe beyond. So in order to do that, go to the smaller time frames. We know exactly where that support is. If we see a series of higher highs and higher lows, that's what gets us in. Okay, so realistically, on a 1 hour will do the job. If we get a series of higher highs and higher lows, we've got the lightning bolt that we need, and we can launch off this level. It's obviously a 200 on the hour chart, so a little bit more significance there to give us that support. But failing that, it's a bit of a sideways trade now, probably until throughout today's trading in New York, though we may actually see the market move enough. So what we want to do is let it play around here. When we see that higher high, higher low sequence, and it could happen throughout the Asian session quite easily. Like, we've got 12 to 14 hours of, there's 12 to 14 candles there that can form that lightning bolt. And if that's what we get at the start of New York or into London, then that's great. And we can actually take advantage of that and start aiming for the 46.30, which is the previous high, but a daily close below the 4,500, and we start to target the low 44s again. So pretty straightforward trading on this one. It's just at a level now where it needs to do what we needed to do to actually get involved. All right, so I hope everyone's had a great week's trading. I think we've had some pretty good moves. We're at good levels again to launch into next week. So have a great weekend. I look forward to seeing you all next week.